Hello, this is Andrew from TrendFollowingMentor.com. Today I'm going to talk to you about trading with fear and greed. And these two emotions are the most detrimental to a trader. And it's like I make the analogy when you're trading. Once you get to a certain point, you don't have this fear and greed. When you have a plan, you know exactly what you should be doing at every moment. There's nothing to be afraid about. You've already figured out what is the worst thing that could happen to you. And the same thing with greed. You don't get excited because you know that it's all a numbers game. You know that there's only 4 probabilities that I talk about all the time. That you have big losses, which you put a stop in, and most times you're not going to have gaps going against you or limit moves. And then the other reality is you have a lot of small profits, a lot of small losses which negate each other, and there's going to be these rare times you have some big moves that you catch. So don't make yourself feel that you're any smarter because you caught a big move. You didn't do anything different. You have a plan, you do the same thing over and over and over again, and you're consistent. And this plan is simple, it's robust, but the hardest point over and over again is us. That we have fear or we have greed. And those two elements destroy traders. And the reality is that 90-some-odd% of traders fail, maybe even 95%. Not because of the system or the method, it's really because of the trader himself. And that's why I decided to do TrendFollowingMentor.com as an educational. The issue is like this, what I'm saying about fear. Fear means that you don't take a trade that you should take a trade. Fear means getting out of a trade that you should be having the patience to stay in. You want to grab that profit. That's fear. That's not following the plan. And then you have issues like with greed that, you don't want to believe that the trade is going against you, and you don't exit when you're supposed to. The majority of people who want to trade are intelligent people, but these emotions are so detrimental that you need to overcome them. The only way you can overcome them is by having a well thought out plan for every potential outcome. So when it happens, it's planned for. You realize it. You know it. It's not a surprise. There's no, unfulfilled expectations. And it's even like when I'm managing money. I'm telling potential clients what to expect. That there are going to be drawdowns. And what's going to be worse than the drawdowns are going to be the length of the drawdown sometimes. And these length of drawdowns can be 2 years, more. And you're going to have 20, 30% drawdowns? That's a reality. I mean, compare it to the real estate market. Depending on where you lived in the States, there's places that went down 50%. And it's illiquid. You can't get out. Compare it to the stock market. How many times did the stock market fall more than 30%? And you didn't have a plan. They said that buy and hold is dead. Maybe it should be. But the whole idea, there is nothing perfect out there. There is no holy grail other than what I always talk about is a robust trading plan that has risk management, time, that enables you to compound money, will over time create extreme wealth. I'm coming up with a new name of it. It's called Formula 72. And the idea of Formula 72 is the idea of compounding money. What you do is you take your rate of return, let's say it's 20%. How many times does 20 turn into 72? It's about 3 and some odd years. 20% is high. Let's say 10%. So every 7 point something years, your money's going to basically double. This is the whole idea of compounding money. This is the rule of 72. There was Dick Fabian. He made a special, he wrote a book, and it was a very simple rule. When you should be in the stock market and when you shouldn't be in the stock market. And it was a 39-week moving average. If you're above it, you should be in the market. You're below it, you should be out of the market. Well, what I'm hoping to do is almost become known as Formula 72. What does it take to compound money? This is the goal. This is the goal, to stay focused, to stay disciplined, to stay patient. Forget about this fear and greed, because you'll never get to what your goal is. And I have it across from my desk. You kind of see it. My head's in the way when I'm looking. Let me go this way possibly. I have this chart. It's a long period of time. Why do I look at it? Because you're going to go through days that are just going to be absolutely ugly. That just nothing seems to work. But you have a goal. You stay focused on that goal. And that goal is to compound money. Formula 72. Forget about fear, forget about greed, put it in your pocket, make a trading plan. If you don't have a trading plan, you should not be trading. This is where it begins and ends. I can help you develop your trading plan if you want a mentor. I had mentors. I was really lucky. Saved me years, and it still took me years. And I've been doing it for 18 years now. And it's my passion, trading, developing trading systems and methodologies, because my goal for my family is to develop world-class trading systems. I'm up at 5 o'clock in the morning working, going to sleep, not that cool, 10 o'clock at night, sometimes earlier. But this is what I love to do. This is my passion. I hope trading becomes your passion. And if you need help to develop your trading methodology, I'm here. The fact is, it's not get rich quick. It's not retirement in a box. It's hard. It's hard work. But if I can do it and others can do it, you can be part of this 10%. Thank you.